Lastly, what kind of role investment bankers play when it comes to the inorganic side of growth? What are buy side mandates? What are sell side mandates? Who are financial buyers? Who are strategic buyers? All the concepts will be explained in detail in this video. Go through this.
Now, when it comes to the inorganic part, okay, we've been dealing with, where is this gap? We've been dealing with the organic part so far. Now, when it comes to the inorganic advisory or inorganic functions, okay, of an investment banker. So, as I told you, it is nothing but growth via acquisitions. This is the premier predominant gist here. Yep. And if you happen to be an analyst sitting in the M&A team, okay, or the inorganic side of the advisory, you predominantly would be, let me write this down. Bitcoin. Hello. You will be predominantly assisting on mandates which are called buy-side mandate or buy-side advisory or sell-side mandate or sell-side advisory. Just a second. Have you heard these terms? I think Archana, I refer you.
Yes, sir.
Yes. Can you tell me what do I mean when I say that an analyst is working on the buy-side mandate?
Like, sir, um, like I was working in the sales side, so I have a bit idea. Like, I don't have that much clarity
No
on.
problem. Sell-side couples. What do you understand by sell-side?
Yes, sir. So suppose any investor, like we have one, like client is there, and they basically want to invest or in a particular segment or the area. So we will try to find the investor for them, and like who can invest in that particular idea or the business. We will basically try to sell that. But if there is one company, they are stressed companies and they want to sell, so we will be advising and find the investor for that. We can
Bulletproof.
buy that particular company.
Okay.
Yeah.
Okay. Sure. Any others? Any others you'd like to discuss? Yeah. Already.
Sir, in the sell side, you basically consult or facilitate the sale of assets or business or equity shares. In the buy side, you facilitate or consult with the buying of the equity shares for your clients.
Very good. So as the name itself tells you, if you are an investment banker and you are hired by a client who has the money and who wants to buy something, it could be an asset or a company or anything else. They've hired you saying that, okay, we want to expand. Okay, we want to expand. This is the rationale of our expansion. We want to expand. Probably why? Because we want to enter into a new geography. This is my rationale. Okay, or I want to enter into a new product line, or I want to get a better technology, or I want to avail some tax benefits. Okay, these are some of my rationals. This is a reason why I want to pursue an acquisition opportunity. Yeah, and these are some of my acquisition criterias. What are criterias? The company should be in a particular geography. It should be operating in one of the products that we are interested in, and we want to have our hands to, for example, in the AI technology, and we see that this company has that technology, proprietary technology. We want to take over that company. Or let's say that company is making losses, but it has a good business model. We should take over it, we will get tax benefits, we will come at a cheaper value, and eventually we will turn it around and we will make profit out of it. This could be some of the rationale. Along with this, they will tell you that, the budget that we have for this acquisition is, let's say, 10 million bottles. Yeah. And we want a complete buyout. We're not interested in just a simple stake. We are saying that we want a complete buyout, along with the other factors like the parameters which we just said, product, technology, attachment, along with the other attributes. So you as an investment banker will have to consider or look for target companies for your client which are in this geography, which have this product, which has access to this particular technology in case they're looking for tax benefits. So you're looking at loss making companies. And because you've been given a budget, for you, this budget simply means that the valuation of your target company should be in this range. And that company or the promoters should be willing to make a complete exit from the business. Yeah. So we'll first search for these targets which satisfy these criteria. You will shortlist, fine tune these targets, probably run that initial list through your client. The client will give you their favorites among those names. From those favorites, you will reach out, you will talk to the management of those three, four company names that your client has given you. Make a pitch to them that, look, there is a buyer, he is offering this much amount of valuation, the long term synergy looks great. Are you willing? If some of them are willing, then you hold the advanced discussions, you follow the same process the way you've done in your private equity. You do models, you build the due diligence, specific the due diligence, you make the management meetings, you do the valuation discussions. You get the term sheet or the agreements signed and execute the pilot. That's your buy side. Vice versa, sell side, the same thing. Your client wants to sell something. So what would you do? You will be hired to find potential buyers. Who are your buyers? Your buyers could be, yeah, where did I write? Yeah, your buyers could be a financial buyer or could be a strategic buyer. If it is a financial buyer, you will again come back here and repeat this process, see for the sector, style, blah, blah, blah. If it is a strategic buyer, you will come again on the upper side and see which companies won't satisfy these criteria and what would be the long-term synergy calculations with that particular buyer and make the pitch accordingly. Yeah. So all these roles that we are seeing, all these things that we just discussed, okay, they are more or less the core picture of practical investment banking that we are seeing. Okay, I've just zoomed out so that you can see that what are the different aspects that investment banking in reality is all about. I'm talking about general things here. There will be many detailed nuances that you will be learning. I'll be taking you through the technical stuff for each and every type of mandate that we have discussed here, both organic, inorganic, okay, both debt as well as the equity part, and plus more, including the startups and VCs as well. Okay. So this is just like an overview part of the session today. Okay. Any questions on things, people? Any questions on anything so far? Now we coach.
Sir, what
So,
is strategic buyer?
Strategic buyers, as I said, where did it go? Yeah, strategic buyers. So strategic buyers are the guys who are actual corporates. Corporates like Larsen and Toubro, corporates like Reliance Industries, corporates like Tata's. These are buyers. These are companies who would be willing to acquire another company. And they will not acquire you just for a few years. They will acquire you forever, for good. Wherever financial buyers are your private equities, VCs, angels. They will make an investment for a time period of 5 years, 3 years, 10 years, and after that they will sell off. Why? Because they've earned this returns out of it. These guys, the intention is they will acquire you and merge the operations for good. They typically will not divest off the operations. They will amalgamate your business with theirs and continue operating as a new entity. Are you with me? Have you understand this?